to the Coin Gamma Show. It's your host, Chris Charles, and we're going to take a trip to the Middle East on this episode. We're going to talk about this new project that is a collaboration between the United Arab Emirates and Saudi Arabia. Obviously, the Middle East is a very important part of the world. It is a place that has a lot of conflict. It's a place that religions were started. It's a place that, in the U.S. has been pretty involved in certain political endeavors and journalistic endeavors, including the Washington Post and Jeff Bezos, who's the owner. A lot of interesting things. National Enquirer. There's a lot of interesting things out of Saudi Arabia. But let's talk about Saudi Arabia, UAE, and crypto, right? This project has a lot of implications. Political, obviously, economic, societal, commodity-wise, and religion. Let's start with religion, right? So when crypto had this kind of bull run last year, there's a lot of questions, particularly in the Muslim world, whether this new technology, whether it's halal, right? Whether it fits within Sharia finance laws, right? There were imams and different leaders of the Islamic faith that said that crypto is not halal, right? Saudi Arabia and UAE being two of the largest Islamic countries in the world, combining on this project. I don't know. I mean, I'm definitely not a cleric. I'm not a scholar, but I would argue that would mean that this tool or this cryptocurrency is halal, right? Obviously Saudi Arabia is a place where millions, if not billions, of people go and do pilgrimages to Mecca, right, which is the Holy Land of the faith, right? And so it's pretty interesting to see that they're working on something together, right? One thing to think about is the fact that these two countries have always been allies. There's a lot of political strife there. These are two countries that are of the Sunni Islamic faith, as opposed to the Shia that it comes out of Iran and in Iraq to extent as well. So they've always kind of worked together, worked closely, and they are also U.S. allies. So it's pretty interesting. And so let's talk about the project, right? So this project is a project where they're doing a test, right? They announced it last year. They just performed their test a few weeks ago, right? The results are not out yet, but it's basically part of a bigger plan, right? So it's a 7-point cooperation plan, right? It's experimental for now. It's aimed at banks. It was unveiled on January 20th, right? And the technology behind it is going to be Hyperledger. Hyperledger is a blockchain technology that is backed by some of the leading corporations across the world. IBM being probably the most popular and the most premier. And so it's pretty interesting that they went with this. We know that companies like Consensus have a strong Saudi advisory practice, right? So they went for Hyperledger over Ethereum. So it would be interesting to learn how that process was made. But let's read the announcement between the two countries, right? So they said collectively, jointly, the cross-border digital currency will be strictly targeted at banks at an experimental phase with the aim of better understanding the implication of blockchain technology and facilitating cross-border payments. The virtual currency relies on the use of a distributed database between the central banks and the participant banks on both sides. It seeks to safeguard customer interests, set technology standards, and assess cybersecurity risk. The project will also determine the impact of a central currency on monetary policies. It's important to note that this is not the first central bank-backed crypto that's been out. Venezuela had their own crypto last year, Petro. It still exists, we think. The collective opinion on the Petro is that it is BS. It's not backed by anything. So for all intents and purposes, we could argue that this might be the first legit government-backed crypto, right? And so one thing to think about is like, hey, this is made uh, for use between two countries, right? And so why do two countries have to send money back and forth? For the most part, it's due to trade, right? And what could they be trading, right? And so they could be trading commodities, right? And what commodity is probably the most known in that area is oil, right? So oil is huge. Oil causes wars. Oil is something that people fight for, right? It's something that it kind of makes the economy go. But it's interesting because you have to think about um, oil actually is denominated in a dollar, right? So the U.S. dollar, right? So the U.S. dollar is the world's reserve currency, right? It's been the world's reserve currency since World War II. The British pound was that in the past, but after World War II, the U.S. dollar has been kind of the world reserve currency. And the reason why it's the world reserve currency is for many reasons. Obviously, due to economic stability, political stability, versus some of the other larger economies in the world. But the fact that commodities are denominated in dollars means a lot, right? So when the UAE and Saudis send oil between each other or make deals, they have to touch dollars. When the Saudis send oil to China, China has to touch dollars. So even when the U.S. is not even involved, their central bank is involved. Their private banks are involved, right? And so if you have a crypto, you have a crypto that's between these two countries that are oil producing. Is the next step having oil is the next step having oil as denominated in this new crypto? That's something to watch, right? It's still early, but people actually has not been the first movement that has tried to unthrone the U.S. dollar as the currency that oil and commodities are denominated in, right? And so let's talk about the Chinese yuan, right? So Chinese yuan, the yuan obviously is China's currency. And last year, they announced that they want to do yuan-denominated futures, right? So oil futures that are denominated in yuan, right? And so China is huge. China is obviously the world's second largest economy. Their reach is increasing across the world, right? Particularly in places like Africa, South Asia, Latin America, you name it. And they're the largest crude oil producer, right? So they have to touch dollars when they buy crypto. So they launched yuan-denominated futures, right, last year. And there's a lot of different things, right? So I mean, it traded quite a bit. It started last March, right? And so we're reaching almost up to a year, right? And there's rumors that it might take it over, but this market trades $1 trillion, right? So even if it traded a few billion, it fell short quite a bit, right? It's nowhere near the threat, right? So this is not something to think about in the near term. It's something to think about in the long term, right? But despite these limitations, here's an article from Reuters that says China's flawed futures contract pushes oil trades to record highs in 2018, right? And so their new yuan-denominated derivative contracts pushed oil futures to record high in 18, and it ate into the market share of the two active crude contracts, Brent and WTI. Brent and WTI are denominated in dollars, right? And so, it was launched in late March. It was China's first attempt to establish an Asian oil price benchmark that has, it got 6% of the oil future share last year, right? So that's huge. It's less than a year of 6%. So if it keeps add, next year maybe it has another 6%, so you're at 12%. Then you keep going, right? So this could be a conversation in 5 years from now, or even shorter, right? And so, but according to this contract, there are some issues, right? It's something that a lot of people cannot trade because, according to this article, it's flawed, right? And so, it quotes Shanghai crude futures are fraught with problems, preventing them from becoming an efficient hedging tool for oil producers and ultimately the benchmark on par with Brent or WTI. One of the main issues is that it lacks international market participants, right? And so without international market participants, you don't have, enough volume and enough people to trade with, right? And so that's kind of natural given it's a new product, right? You need banks to pick it up. You need brokers to pick it up. You need people to be able to obtain yuan in order to get it, right? And so now that, yuan obviously is at the middle of a lot of controversy as far as, capital controls and things of that sort. So, it's interesting. It's early, but again, that's another threat to the dollar being the only thing that, oil is denominated in. Oil is until clean energy improves or becomes cheaper, oil is still the premier platform or the premier commodity that's used for energy production, right? And so, whether it's the yuan futures or whether it's whether it's the whether it's the crypto that the UAE and the Saudis put together, there one could argue that there's a threat, right? And so the dollar is very connected to commodities, right? The balance. Check out the balance. The balance. They quote, the primary reason the value of the dollar influences commodity prices is that the dollar is the benchmark pricing mechanism for most commodities. U.S. currency is the reserve currency of the world, as I said earlier. U.S. dollar tends to be the most stable foreign exchange investment, so most other nations hold dollars as reserve assets. And so when it comes to international trades for raw materials, the dollar is the exchange mechanism in many, if not most cases. When the value of the dollar drops, it costs more dollars to buy commodities. At the same time, it costs a lesser amount of other currencies when the dollar moving lower, right? And so even the balance kind of made a nice summary of what I've been saying throughout this episode. The dollar is very, very important in commodities. The most popular commodity in the world is oil. Guess what? Who has the most oil? Saudi Arabia, and UAE also is a top producer as well, and they're creating their own crypto together, right? So then China obviously is the biggest importer of oil, and they're doing their own thing together as well. So it remains to be seen what this could lead to, but you have yuan-denominated oil futures. You may have crypto-denominated oil futures. There's something to watch, something interesting. Again, this is not something that's going to happen in a day, a week, a year. But, over a 3, 5, 10-year time horizon, it's something to think about, right? And so these are some of the cool crypto-related narratives that I like to think about, I like to watch, and so I think you should too. Until next time, thanks for listening. Subscribe to the channel. If you listen to us on the podcast, please leave a review, and look forward to digging into another theme within the crypto and blockchain space